Yo, what is going on, everyone? Hopefully everyone is keeping well. So in today's lesson, I'm going to keep it short, sweet and simple, and I'm going to show you the only correct way to use the Fibonacci tool. Okay, so as we know, the Fibonacci tool is nothing special. There's no magic numbers to it. Most time it doesn't really matter 100% what the numbers you're using are. It's the simple concept of understanding premium and discounted pricing. Understanding that to buy things, okay, in order from the market to move from an accumulation to distribute, the market has to be bought. Okay, the SM is simply going to buy at discounted areas and they're going to sell at premium areas. So when we say premium areas, it means at the top of the range above the 50%, the 50% of the fib being the equilibrium. When we are talking about buying from a discount, we are talking about the bottom of the range. The bottom of the range being down here. So we are looking for a retracement down below the equilibrium, which is neither expensive nor cheap. So we are looking to buy things at a cheaper price right here, before looking to launch up. Similarly, we look at the top of the range. Rather than selling from the 50%, we are looking for price to retrace in deeper to the 71, 78.6 or the 88.6 in order to sell from here at premium pricing. And what this helps me do is it helps me filter out the institutional candles in a trading range that might not be as high probable. Okay, so it helps me filter out. If I see 3-4 institutional candles in one trading range, then I'm able to pick the best one, being the ones deeper within the range right here, deeper within this leg, picking it from the 71, 78.6 or 88.6 level, avoiding anything above this level. So let's take a look at a quick example right here on the 30-minute on XAU USD, and we're taking a look at this trading range right here. Price broke to the downside, as you can see, broke structure, etc, etc. So in essence right here, we will be looking at price from here, and what you can see is we noticed a few institutional candles here, and we're trying to choose which one are we going to sell from. We have this one, okay, we also have this institutional candle right here, just like so, and we also have this last one right here. You can count the full wick or you can just count the open, doesn't really matter in this instance, whatever we want to trade it. So we have these three. Now in order for me to pick, I can go about this in two ways. I can either place orders on all of these three and just break up my orders, so like 25% here, 50% here, 25% here, etc. Or I can really just go 100% of my position on just one of these. But what helps me decide which candle to go for? Well, the Fibonacci tool here is the one that's going to help you decide which one to go for. You take the Fibonacci tool from the high to the low, and we like to take it from wick to wick, just like so. So from this wick to this wick, and what we wait for, and make sure you see the break of structure first of all. If you don't see the break of structure, then what you should be looking for is this range from this low to this high. But since we got this break of structure, this confirmed a new trend for us right here. Okay, so a new TR. So we take the wick from this high to this low. Now we look at the institutional candles that are within the premium levels. And where are the premium levels? The 71, the 78.6 and the 88.6. So straight away, I'm not interested in this institutional candle anymore because it's on the 50. Okay, so it's in the equilibrium. I'm looking for the institutional candle that is within the 71, 78.6 or 88.6 level. So in this instance, this institutional candle and this institutional candle would be the ones that we are looking for. So we let price do its thing, and instantly I'm not looking for this institutional candle anymore, and this is gone. So already we broke it down to two different institutional candles, and this one right here being the one that I'd most likely go for the simple fact that it is much bigger in size right here, as you can see, and it is the lowest one. Okay, it is the lowest one in this premium area, just like so. And the biggest thing here being is it is the one that has an imbalance right below it. So when we have an inefficient price action like this, you can see the IPA, when we have an efficient price action like this, we want to see this institutional candle be mitigated. Why do we not want to see this one? Most likely probably not be mitigated because we don't have any inefficiency right here. As you can see, everything is balanced. The wick fills in any imbalances that would have potentially been there. So this is the candle that I go for, and already I'm cancelling this one out, but still keeping in mind that price might come up here. and price does its thing. As you can see, breaks through here, and now as you can see, taps into our institutional candle, and it goes from the wick, and we simply target the low. Price does its thing, cleared the low. As you can see, very, very successful, nice trade, just like so. Okay, similarly here, we can go from this high to this low, giving you guys another example, just like that. So what does price do here? Let's take a look at the replay tool. We see 3 different institutional candles. 1, 2, 3. Now, going back to what I said earlier, which one do we go for? We take the fib from the high to the low. We look at the 50. Anything below the 50, we don't consider it. So this one straight away is gone. We see this one, non-efficient price action, but this one's lined up with the 786 beautifully. So this could be a potential. But the one above it this time has an imbalance. You can see between this wick to this wick, there's a little imbalance. Hence why this is something that I would look to see get filled in, because we have that little inefficient price action within here. And this candle clears liquidity, etc., doesn't fails to break structure. So this is in line with our institutional candle confirmation. So this is the one I'm looking to sell from. Place my stop loss above the close of the candle. Place my take profit below lows or below this low right here. And we let price do its thing. Price comes up slowly, boom, taps, sniper entry. And I start targeting the lows for liquidity. First take profit. Second TP will be here, and as you can see, price is currently at this is current market level right here. Okay, so this is pretty much it for this lesson. Appreciate every single one of you for watching through to the end. Hopefully now you have a better understanding of how to use the fib. The fib is very, very easy. Of course, there's others that use extensions for profit targets, etc. I don't need any of that. I use my liquidity as my profit targets. So that is it for this lesson, and have a great day. Bye bye.